All right, folks, let's talk real estate. It's May 28th, 2024, and we have home prices hitting all-time highs, following right along with other commodities, right? We consider a house to be a packaged up commodity. When we look at the commodities separately, well, gold's gone to all-time high, copper's gone to all-time high, we've seen Bitcoin go to all-time high, and Nvidia is at an all-time high. It was up about 5% in overnight trading just last night, which is very exciting to talk about, but I like to break down this real estate data because we all got to put a shelter over our head, at least ideally, right? Unless we want to go live in the woods, which sometimes doesn't sound too bad. But let's get right on into the data. There's a lot to talk about here, and you guys know it's so important that we bring these real estate updates for you. So I have specifically made a real estate reset playlist. So make sure you guys check that out on the channel after you subscribe and hit that notification bell so you don't miss any of our updates. And you already know the deal. It's all at ZachRector.com. Let's roll. So here's the main headline hitting the news today. Home prices reach new high in March, Case-Shiller says, fueled by scarcity. Now, what's funny is I've been sitting on this thumbnail because home prices continue to hit a new high month after month. I've just been waiting to use this thumbnail for a while, but I finally am getting around to it. Here we are once again breaking records this month, and this is data coming out of March. Home prices in the 20 biggest U.S. metros hit another all-time high as the housing market remains hampered by a low number of properties for sale. It all comes down to location, 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 and what else? Supply. As I've been saying, if you're in a great market, great school district with a lack of supply, your prices are probably still going up, and they might go up a lot more because folks are fleeing the cities, which is exactly what this S&P CoreLogic Case-Shiller 20 City House Price Index rose 0.3%, right? The Case-Shiller Index tracks the 20 biggest U.S. metros. Now, what we have right here, the 20 city and the national index are at an all-time high with key details right here. San Diego posted the biggest year-over-year home price gains in March. Prices were up 11% in San Diego. All 20 major markets reported yearly gains. Home prices grew the slowest in Denver by 2.1%, but still grew, right? Atlanta, Boston, Charlotte, Chicago, right? This is the largest metros. Seattle up 7.8%, New York 9.2%, 8.8% for LA and Cleveland and Chicago, 8% respectively. So you're seeing it. The market is still hot. But let's break down because the devil's always in the details, isn't it? Here's what the Case-Shiller doesn't include in this data point. Doesn't include condos, and there's been a condo absolute crisis. Go look at San Francisco and some of these other cities. See, these cities where they're showing home prices going up by so much, if you just included the condos in that data point, it would be shocking how much different data this would spit out if you just included condos, because they're having fire sales at condos across Florida where insurance has gone up, the cost of the HOA has gone up, special assessments, and folks are literally having to sell off their property because they can't afford the HOA fees anymore. The insurance coverage is just dropping completely. So if you just included condos in the Case-Shiller, you would be shocked at the data that you would get out, just including that. But it doesn't include condos, repossessions or foreclosure, sales to family members. So they consider what is included is arm's length transactions, where basically there's a fair market value. It's not you and a family member. It's you and it's a buyer and a seller that both come to an agreement on what the fair market value of that home is going to be. It doesn't include homes that are sold more than once in 6 months. So basically flips. But like I said, if you just included condos in that, this would be a whole different data point that we'd be talking about here today. But what I wanted to bring home a point, this is very, very important. I'm going to show you next the real estate to gold ratio. So in US dollar terms, right, houses have gone to all-time highs. But what about paired up with gold, which is now at a new all-time high above $2,300, pushing towards $2,400. Well, if we pull up that real estate to gold ratio, you will see right here that we have actually been in decline over the past few years here. We're down to nearly 200 ounces of gold to buy you that average home, right? So this tracks how many ounces would it take for you to buy that median home based off the Case-Shiller home price index. Okay. So you can see that prices have actually declined compared to gold. Same thing with our stock market. S&P 500 in gold terms has been flat for the past 6 years. Now, we're talking real estate here, but I just wanted to drive the point home. Compared to what is the question that we always have to ask. Compared to gold, well, prices aren't at all-time highs. The S&P 500 has been flat for the past 6 years compared to gold. Now, compared to the average home price, the home price is falling compared to gold, right? So it's interesting to track that. Now, homebuyer conditions for U.S. consumers plummeted to their lowest level in history this month. The index of buying conditions for houses fell to about 30 points, which is below the previous low of 40 points in the early 1980s. In just 4 years, conditions for buying a house have dropped by 110 points, a massive 73% decline. Meanwhile, buying conditions for vehicles and large household durables are down for 3 straight months. Affordability in the U.S. is somehow still getting worse. And this is where they've gotten it so wrong, is they predicted 6 rate cuts last year, 7 rate cuts this year. And this is why I've been beating up the real estate folks that are begging for forgiveness, begging for that rate cut. And yeah, we all, would like to be able to finance things for cheaper. But when you've had historically low interest rates and then we raise them back up to a normal level, we shouldn't be begging to go back down to 0%. We should just be asking to let the market price it. That would be the real thing, is let the free market decide where interest rates should be set at, not the Fed arbitrarily deciding where they should be set at. And in causing these bubbles and then rug pulling the U.S. economy just like the Fed did by raising rates at the fastest pace in history, which is exactly why this next data point is happening. Housing supply hits highest level since October 2021, but home sales dip. Sales of home listed over 1 million jumps, though. Now, this is what's driving that price higher. Remember, condos aren't included, which is, lower priced homes. Foreclosures aren't included, which is, folks turning it back over to the bank. But what is included? Well, $1 million homes. And so what this is doing is this drives up the average price. That median, the mean, the average gets raised because what we're seeing still move right now is sales of homes listed over 1 million is increasing, while the average home sales are dipping. U.S. home sales fell in April as homebuyers struggled with the expensive housing market, but the industry is optimistic about the pace of sales moving ahead as inventory increased to the highest level since October 2021. And I do expect that we will see it pick up. It is inevitable because now you're starting to see the inventory come online, reflected in the next data point here from Nick Gurley. What's happening in Florida's housing market is wild. You have zip codes where inventory has literally increased 1,000% over the last 3 years and is now sitting 2 to 3 times higher than the long-term average. This is why I call it a real estate reset. If you're nice and cozy in a market with limited supply, your home prices might still be going up. You might still be living very comfy in that zip code. But if you're in a zip code down here in Florida where, inventory has increased by 1,000%, what do you think is happening to prices? Suggesting a major market downturn is coming to cities like Cape Coral. Look out below. Huge shout out to Nick for that data point. Now, continuing on here, Ethan Flynn, Redfin weekly data showing some major warning signs for Saverville, Tennessee. Price drops are more than double any year going back to 2017. See, folks, this is confirming that real estate reset, and you look at some of these markets right here, price drops are more than double any year going back to 2017. Active listings up 16% year over year, higher than the same week in 2022, previous week 19 high going back to 2017. Pending sales, only 35% lower than the same week going back to 2017. What's happening? Is the market changing as fast as the data suggests? It is 100%, because that's not the only data point. That's not the only market where this is taking place. Housing inventory in Dallas, Texas is absolutely exploding. I love this market, by the way, as far as if I wanted to pick up and get out of the woke West Coast and go somewhere where freedom reigns. Dallas, Texas, I really enjoyed my time there last year. Did a Discord meetup down in Dallas, had a lot of fun. They're really booming down there. And the housing inventory is absolutely exploding. What it would cost me to go down there and buy a house for the family is unbelievable compared to what we're paying up in my neck of the woods. It's actually sickening. But down there, the inventory is flooding the market, and it's new home construction and very, very nice areas too, very nice communities in the Dallas metro. With the number of homes for sale spiking 342% over the last 2 years. The pandemic low was 5,419 listings, April 2022. Current level is 18,000. So you can see, folks, just in 2 years' time from the pandemic low, which was artificially created, right? 5,400 listings. Now look at that. Tripled. This market is turning down fast. Don't be surprised if prices drop in the second half of 2024. Yeah, we're going to be watching it closely. Continuing on that. Now, this is the new home builders, right? We talked about it. Existing home sales down, but what is still moving? The higher priced homes over 1 million, that's actually growing, which drives that median price up. So now the talking head pundits can run with, all-time high prices. I can make a thumbnail and a title that says home prices hit all-time high to suck you in and then show you that the devil's in the details, because that's what I do. When it comes to new homes, home builders are slashing prices to lure home buyers, but it may not be enough. New home sales down in the U.S., Northeast dropped by nearly 21%. They're doing everything they can to move it. Sales of newly built homes in the U.S. fell in April as home buyers scaled back in the face of high mortgage rates. And that's what it comes down to. The affordability is at a level that we haven't seen since 1980, as we showed you in the earlier data point. Sales of new homes fell 4.7% to an annual rate of 634,000 in April from a revised 665,000 in the prior month. The number is seasonally adjusted, of course, we understand that. The key detail, the median sales price of a new home sold in April fell to 433,000 from 439,000 in the prior month. So this is new homes. Remember, not tracked in the Case-Shiller. So, we don't include condos, we don't include repos, foreclosures, we don't include sales to family members. And think about how many transactions are going through only because a millennial like myself is getting money from mommy and daddy or from grandpappy, right? Think about how many deals are actually still getting done and only getting done because grandpappy's handing down 50 racks for a down payment, because mommy and daddy are selling a home to the kid. That's relieving more pressure from this market. And, what we've seen now, I don't have the data point in front of me, but the amount of folks that are having to go to family members and friends and get money to get a deal done is pretty incredible. Now, to summarize this all, folks, this is why I call it a real estate reset. This is why we're staying over the target, watching this market so closely. We can't just try to pick out the next Mickey Mouse meme coin for 10x gains. Now, you can do that. That's fine. I love that. Go make your money. That would help you have some money for a down payment or some home improvements, maybe, right? But when it comes to real estate, this market's slow. It lags. And many folks don't understand how to break down and decode the data, just like with the broader financial markets, the inflation data, and everything else that they're spoon feeding us on the television. So this is why I'm going to keep on bringing these real estate updates for you guys. I want to know from you guys, what are you doing right now? Are you renting? Are you buying? Are you selling? If you're investing, what are you investing in right now? Are you buying more rentals? Are you doing short-term? Short-term's getting killed right now. Some cities are banning Airbnbs completely. So I want to know, I want to hear from you guys. I want feedback. Give me the data, please. After you smash that thumbs up, let me know. Are you buying? Are you selling? Are you staying put? A lot of folks with the golden handcuffs. And what is happening? What are you observing in your market? Let me know where you're at, where you're investing in, and what your observations are. I appreciate you guys for stopping by for this real estate update. We got more on the way for you guys, so stay tuned. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.